Hello and welcome to CMC Markets and this quick preview of the week beginning the 9th of January 2017. And first and foremost, Happy New Year to all of you. I'm going to be looking at the start to this year, which thus far has been a fairly positive one for equity markets. At the time of recording this video, the FTSE 100 has just posted a new all-time high above 7,200. Equity markets in general continue to look fairly buoyant, and interest rates on government debt continue to push towards the upside, though interestingly enough they haven't as yet taken out the peaks that we saw in the middle of last month. So what have we got to look forward to this week? We've seen some fairly decent economic data pretty much across the board at the beginning part of this week. Services PMIs have been fairly buoyant from the UK, the US, the European Union, in China and Japan. More importantly, pricing pressures are starting to show signs of increasing further, and I think that's really helping to drive the sell-off in bond markets. But more importantly, I think, was the minutes from the latest FOMC meeting, where we saw the second interest rate rise in the space of 12 months from the US Federal Reserve. And what struck me about those minutes was the fact that ultimately, while Fed officials expect to see further rate rises, the timing of the next one still remains very much a grey area. And I think that is probably prompting a little bit of profit taking in the US dollar, and certainly I think there is some resistance near 104 in the US dollar index. We're seeing a little bit of dollar weakness, particularly against the Chinese yuan as well as the Japanese yen, and those are the two particular currencies that I'll be paying close attention to over the course of the over the course of the next week or so, and particularly the Chinese yuan, given the fact that it's a big week for Chinese economic data. First and foremost, we have Chinese trade data for December this week, and we also have Chinese inflation data. Now, if I cast your mind back to November, we saw a big jump in Chinese PPI from 1.2% to 3.3%. Now, given that 3 months previously we were firmly in negative territory, I think the first signs of rising inflation, it's a big turnaround in Chinese PPI, and I think there is an expectation that we could see another big increase in Chinese PPI. And I think that in itself could temper any further Chinese currency downside, simply because Chinese officials will want to see what further inflation pressures are in the pipeline, given the weakness in the currency that we've seen over the course of the past few months. We've gone from 6.5% to 7% in a very short, 6.5 to 7 against the dollar in a very short space of time. So the Chinese economic data this week will be very, very important, and the Chinese inflation data in particular, which I believe is due out on the Tuesday. What we've also got out later this week is US retail sales for December. Now, Macy's announced earlier this year, in fact the first week of this month, January, that it was cutting 100,000 jobs, cutting 10,000 jobs and closing a number of stores because of very weak sales in December. Online sales holding up fairly well, but what I think has been quite notable in recent months has been the fact that while durable goods in the US have started to show signs of picking up, and retail sales have started to show signs of picking up, particularly in September and October. In November, we saw a fairly weak US retail sales number of 0.1%. So Friday's retail sales numbers are going to be particularly key in the context of whether or not the pickup in consumer spending that we saw at the beginning of Q4 in the US economy is sustained into the end of the year as well. It's also going to be a big week for bank earnings. It's the first its earnings season starts, and bank earnings, US bank earnings in particular, will be of a particular importance to keep an eye out for. We'll be looking at Wells Fargo, Bank of America and JP Morgan, and certainly US earnings have been significantly outperforming European and UK bank earnings, simply because of the fact that ultimately there's been an expectation that the Fed is going to tighten monetary policy. The yield curve has been much more positive in terms of carry for US banks than it has for European banks and UK banks, and ultimately I think the expectations are going to be for a fairly decent US earnings season on the banking sector. We're also going to be seeing a continuation of Q3 sales trading statements from Marks and Spencer's, Tesco's in the wake of the very poor report that we saw from Next in the early part of this year. I think the big question here, I think in particular, will be for Marks and Spencer's and their turnaround plan. I think they're starting to focus just as much on food as they are on general merchandising, and I think that could actually save Marks and Spencer's bacon, so to speak, when it comes to its earnings report, which is due out on Thursday. So those are the key factors that I will be looking at this week. Well, I'll be keeping a particular eye out on the US dollar index and that 104 level, and also be looking at that 7 level against the Chinese yuan, which acted as a significant resistance level earlier this week and has prompted a big sell-off, as can be seen from this chart, down to the previous October highs of around about 6.79, 6.78. So that's it for this week. This is Michael Hewson talking to you from CMC Markets.